Picture special. We are in conversation with Professor Vijay Joshi, who's recently written this book, India's Long Road, The Search for Prosperity. Professor Joshi, taking off from where we left off before the break, you've also analyzed how inflation has kind of evolved over the years in India. And interestingly, in the period 2008 to 2013, something that you've analyzed in depth, you've said that the average inflation rate in India was 10%. Whereas the average for the emerging markets was 6.5%, 6.6%, whereas the developed world average was 1.9%. Clearly, we've seen since then inflation rate coming down, thanks largely to the crude oil prices. But clearly, we are going wrong somewhere. What seems to be the issue?
Well, I think the issue in the period that you mentioned was that there is, apart from the usual reasons, like there were shocks like bad harvests, and these things happen in from time to time in India. But the real point was that the RBI, in my opinion, got it wrong. They pursued what I would call a softly policy of keeping interest rates low for too long. Interest rates were well below the rate of inflation. In other words, the real rate of interest was negative. And that is not the way you run an anti-inflationary policy.
So that pushed us into a phase where we were seeing high inflation, but low growth, almost pushed us to the point of a stagflation.
Well, I wouldn't say that the low growth was because of that. The low growth was for different reasons. The low growth was because investment was put off, because there was the macroeconomics was going out of control, and because there was a debt overhang, and because there were governance problems. There was the so-called paralysis in the government after the various scams came to light and so forth. So the investment famine was not caused by interest rates.
Yes, absolutely. No, but I'm saying in largely, so we were at that point in time facing a situation where growth was low, there was no causality between RBI's low interest rate regime, and at the same time, inflation was on the higher side. So in that sense, we were sort of, we were in a very precarious situation at that
And the
point.
balance of payments position was very bad.
Talking about private investments, sir, because we've seen private investments falling precipitously in the last few years. And the government has been trying to make up for it by investing more in roads, infrastructure, ports. But if you will look at the long-term horizon, in the context of shrinking government resources, how long can the government make up for what the private sector is not doing?
It can only do that to a very limited extent. As you know, they departed from the roadmap for fiscal adjustment in the last financial year, but they have gone back, to the roadmap this year. But increased public investment can only go so far, because the fiscal situation is very tight. So you've got to somehow get the private sector to invest more.
So in that sense, now with the debt overhang, which is one of the issues that you've raised, which had inhibited private sector from investing, and we've seen, with the NPAs, how do you see the government's approach then in actually addressing this issue, addressing the elephant in the room, which many say that previous governments should have done a lot more about?
Well, the government appears to me to be addressing it by taking measures to improve what they call the ease of doing business. And they are doing a lot. I mean, it is true that people say, if you can make money in India, you can make it anywhere. So, to make it easier in India is definitely a very important thing. So the government is doing that. But the debt overhang is not just a debt overhang. There's also that the balance sheets of the banks are in a very bad state. So not only is the industry not demanding credit, but the supply of credit is not there, because the banks are in a very bad shape. And so the banks have to be put right.
Exactly.
And the Reserve Bank is trying to do something about that. But
in fact, today itself, the Reserve Bank actually announced 22,000 crores for recapitalizing public sector banks. So that is one of the measures that they've taken. But finally, sir, we're completely out of time now. One point that I want to bring up with you also about the role of institutions, because at one end, we are seeing this political and social awakening of people who in the past did not have much rights or power. But at the other end, institution decay is almost ubiquitous. So in that sense, I mean, how do we revitalize our institutions?
No, I think that you're completely right. The message of my book is that the government should leave to the market what the market is good at doing, but the government has to do the things that are squarely in its own domain, and it has to be it has to do it much more effectively. You know, we have let our administration, atrophy. So there has to be administrative reform. There has to be reform on the ground in delivering education and health, and that's where I'm really disappointed with this government. That while they are doing things on market reform to some extent, they have so far completely neglected this other aspect, institutional reform. And in the long run, we are not going to be able to maintain this high quality
So we are
growth.
following a skewed development model now, you feel?
Yes, I think so.
Top heavy, but then...
I think so. We are not dealing with the foundations. And the foundations require good education and good health. For the universally. I mean, we're not talking here about higher education.
Right.
We are talking of the basics. And without that, it would be very difficult to do Skill India and all that, unless the foundations are solid.
Professor Vijay Joshi, it was an absolute pleasure to speak with you and wish you all the luck for your book. Well, this is his book, India's Long Road, The Search for Prosperity. If you really want to understand and get a deeper perspective of India's economic story since 1947, this is a book that you must have in your library. With that, we need to quickly slip into another break.